Good evening, everyone. This is Wayne, and this is the video version of the trade report for Tuesday, May 15th, 2018. Well, I called for a pullback, but as always, you need to be careful what you ask for. Stay tuned to find out more. Greetings, everyone, and thank you as always for joining me as I go over the action and activities from the financial markets trading session today. And we had a bit of a down day today. Now, all of that being said, that's a good thing. Remember what I said yesterday in the trade report video, and that was, in order for a market to continue going higher, it has to go lower. We're in an accumulation cycle, and so in keeping with that, we need to have a pullback. And I've been calling for that since last Friday. And actually, I was calling for it on Thursday for the Friday session. So at any rate, you've heard me talk about it now for a couple of trading sessions. But we got that pullback today, and boy, did we get a pullback. And like I said in the intro, be careful what you ask for. So this pullback we got today was a pretty meaty one. It was almost 1%. That being said, we bounced up off of the lows and actually closed off of the lows of the session in all of the indexes. Technology stocks kind of took it on the chin today. Amazon, Google, Facebook, Netflix, Nvidia, all of those got smacked down pretty good. We'll take a really quick look at those a little bit later. Right now, this is a chart of the SPX, the S&P cash market, the S&P 500, which is where the daily quote comes from. And you can see that we had a gap down, excuse me, we had a gap down from yesterday's close, which was here, and today's open was here. Now, what that does, of course, is it sets up the probability, the possibility, I'm going to say the probability that we do get a gap fill, which means, of course, we would go higher in order to accomplish that. So when will we do that? Well, we're going to take a look at that using using the dynamic trader Fibonacci chart. So today, this is the candle for today. Now, yesterday I mentioned that, we had a candle that looked like it might have some bearish dynamics associated with it. And yes, definitely, we got some follow through to the downside. So from a technical perspective, we did have a bearish follow through, but I'm going to make a statement now that might confuse some, if not all of you, but this is actually bullish. When you have a move to this degree that gets this kind of a pullback, that's good. In fact, we could actually stand a pullback to about right here, down to about 26.75, another 25 points or so. Now, that would really get the blood flowing in most market participants because, well, we've been through a lot, as I went through yesterday's video talking about, all of this, chop, 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 chop since February. We start going down again and, you start getting a little anxious. There's a little bit of fear. There's some natural reactions to a market that begins moving down again and volatility begins rising after we've been through what we've been through this year. But we've broken out of the downside triangle with this move. Now we're in a very different market. And so to get a pullback at this point, as I said, is a positive thing. So I am looking for the potential of some additional downside, but only through tomorrow. And then I think we start going higher. And where we end up going when we go higher, I'm not sure, but we'll take a look at some Fibonacci's, like I said, in order to try to figure out that mystery. So this is the SPX, so the S&P. Now the Russell 2000 actually had a real good day today. It closed basically flat. It closed down 3/100ths of 1 point. So, basically flat. Now, let's go ahead and get that up here. You can see how it also had a move to the downside, tagged the 100% symmetry resistance line, which is now support, and then basically popped right back up. Now, it closed higher from where it started the day, but it closed lower than the close of yesterday. So technically it closed a little bit lower. Now, the Russell has been on fire. We've talked about that. Yesterday, the Russell was the worst performer, and it really kind of, dropped off pretty significantly. It had a little bit of follow through today, but then just caught itself and went back up. I think the Russell's probably going to make new highs in the next day or two, if not by the end of the week, then for sure. So the Russell's looking very good here. I mentioned the NASDAQ. Actually, I mentioned tech stocks, which is where tech stocks live, is in the NASDAQ. And you can see it had a very rough day today. The close from yesterday was here, and the open today was here. So we've got another gap to fill, but again, the NASDAQ looked a little rough around the edges today. Now, the last several sessions, tech has been very strong, however. So for there to be some profit taking in tech makes sense, especially given the fact that we are looking at, this rather significant up move that, now we're getting a pullback from. So I don't want to just talk about a pullback in a vacuum. We need to look at the technical levels associated with the dynamics of a pullback. So how far could a pullback go? Well, I look at the Fibonacci levels, but I also look at the Ichimoku cloud. And so the Ichimoku cloud is beginning to move lower, and then it goes into a negative cloud, comes back up into a positive cloud, and then back into a negative cloud. So right now, we're looking at the very real potential of this cloud here basically being a place where price can head down to. Now, that's a long way to go. In fact, I believe that's probably further than it will go, but I've seen stranger things happen before. You get a technical level and you get a technical indicator that shows that there's the potential for price to begin moving toward or to or through a particular area based on a price level. And the next thing you know, it's there. So, only time will tell. I've got to point these things out because these are very, very possible. They're not necessarily probable, however. So I would say what's more probable, if we are going to head lower, is to go down to about here, this level here, which is in keeping with this area right here. This is where we had a little bit of consolidation, and then we took off to the upside from there after this 2-day move that really accelerated the upside in the NASDAQ. So, the NASDAQ is kind of the wild card because tech stocks, they go up a long way and they come down a long way. So we'll just see how that all plays out. And of course, the last index that we need to look at is the Dow. And the Dow closed down 193 points today. So it had a rough day. And I didn't mention how far down the NASDAQ closed down. The NASDAQ closed down 60 points today, which for the NASDAQ, yeah, it's a pretty decent move. Not incredible. I mean, we've seen the NASDAQ move a couple hundred points, but 60 points, that's enough of a down move in the NASDAQ to take down the big tech stocks to a pretty considerably a pretty sold off level in the big tech stocks like Google and Amazon and Apple. And so anyway, getting back to the Dow here. So before the market opened today, Home Depot reported their earnings, and the market did not like what they saw. And Home Depot basically began selling off. So that started the Dow off on the wrong foot, and then Microsoft started selling off, and Apple started selling off, and Boeing started selling. I mean, just everything in the Dow started selling off. So for the Dow to close down only 193 points on a day when there was a lot of downside pressure today, but it was ruled by algorithms today in the market. Computer-driven trading models were really what was pushing and pulling this market around today. And I do expect that to occur again tomorrow. Not to the same degree. I think there's going to be a tapering effect beginning tomorrow. And monthly options expiration is this Friday. So there will be fund managers and institutional investors coming in and beginning to put money to work. So we're going to get some transitioning, if you will, from the machines to the humans starting tomorrow. So I'm looking forward to some price action that's more in keeping with something that makes a little more sense and can be participated in. I didn't do anything today. I was an observer, and that's a frustrating place for a trader. But you just have to recognize what's happening and just, play it safe and know that, you'll survive to trade another day. So, Dow, dropped. It's in a negative cloud right now. It could drop a little bit more, but this market is a little stronger than today's price action would have revealed. I think we will consolidate tomorrow. We might go a little bit lower, but I think overall tomorrow is going to be a sideways day. We might even go a little higher. I don't know. So maybe a little higher, maybe a little lower, predominantly sideways, just a consolidation day, and then we start going higher on Thursday and Friday. That's my thesis for the rest of the week. We'll see if that plays out. Now, right after the close today on the news, they talked about how North Korea has suspended the North Korean, South Korean talks because of military drills being conducted by South Korea. That could be a binary event that throws a wrench into the best laid plans of the bulls taking this market higher. We'll have to see. And of course, we have the Middle East tensions that are going on because of the U.S. Embassy that opened in Jerusalem yesterday. And interest rates are now back on the table. Inflation fears are beginning to be talked about again. The 10-year Treasury note yield went up to almost 3.1% today, which is a monstrous move. So, we'll have to see how all of this plays out. And we do know that the cycles of this market, as it relates to these fundamental geopolitical dynamics, are very short. Oftentimes just a day or two. We'll see. I don't know. It's just basically a situation that we have to take one day at a time. All right, so that is that's the indexes. I want to show you crude oil. Crude oil had a real big plunge today. Let's see. Let's get this. Yeah, there we go. Show you the 15-minute chart of crude oil. Get that pulled up here. And in the pre-market today, crude oil caught a nice bid. I mean, it just basically went like this. It went kind of parabolic. Went from about not quite $71 a barrel all the way up to about $72. I mean, a dollar move in crude oil is a lot. And then, of course, it basically collapsed even further than from whence it came. And then throughout the session today, it kind of recovered, made higher lows and higher highs. And on the inventory report after the close, it had a little bit of a pullback. So oil's doing what oil does best, just kind of all over the map. For all intents and purposes, staying bid, which means it's holding its highs, but still wreaking enough havoc and creating enough price action to keep oil traders on their toes. Now, I want to get into some oil here, but I need to see it stay above $71.50 a barrel. I think it's going to 80. That's my thesis. I don't know when it's going to get there. I think it'll get there by September, because that's when the Aramco ETF is scheduled to IPO. So we'll see what happens. But I think in the meantime, we should have some relatively decent opportunity to see oil maybe go to 75, possibly even 76. So from these levels, that's a $4 or $5 move. And that's a lot, because every $1 move in the crude oil contract is $1,000. So it's 10 times that of what stock options are. So anyway, that's crude oil. And we'll get over to the indexes. Or not the futures. Oh, I want to get over to this first. Or I want to get over to that eventually. I want to get to this first. So in the extended session, which we've got about 7 minutes until the extended session goes into quiet time for an hour, it looks like we've got a little bit of a bid here. So that North Korean, South Korean situation doesn't look like it's affecting the markets too terribly. And okay. So getting back to what I just took off of there. So this is a daily chart of the S&P 500. And you know what? Before we do this, because I do want to kind of close on this, let's just real quick take a look at a couple of tech stocks. And we have to look at the VIX, of course. The VIX, in fact, let's look at the VIX first. The VIX has absolutely come alive today. It actually went up over 15% today. And you can see where in the pre-market it started going higher and then basically just kind of went higher throughout the day. Had a little bit of a pullback midday when the market tried to go a little higher, but then caught itself and went higher. Went down into the close and now is kind of modulating, if you will, in the extended session. And let's go ahead and take a look at the daily chart, which is what we are most familiar with in the for the VIX. And here we go. So yesterday I said I was looking for lower prices in the VIX, and today that was an absolute opposite move for the VIX, which of course you are going to get an up move in the VIX if you get a down move in the market. The degree to which the VIX went up today was, in my opinion, a bigger move than what was being reflected in the indexes. So what I'm saying is I think the VIX overreacted. I think the VIX got pumped up too high, and there was an expectation based on the trading in the VIX that the market would actually go lower, and it didn't. So I think the VIX is going to come down tomorrow, and I think, as I said, that there will be some moderation in the indexes, in fact, in the markets as a whole, and that will set the stage for the transition between the algorithms trading and the humans coming in and trading, and then the markets going higher into the end of the week. And again, that's my thesis. That's not what I'm stamping in gold as a promise of price action. It's my ideas based on the probabilities, and a variety of other indicators that I use. And that, of course, is barring any binary events that might find their way into the market as well. So that's that. So and before I go over the the S&P Fibonacci levels that I want to show you, let's just do a real quick look at Amazon here. Amazon had a rough day. It was down over $30 at one point. It closed down about $25. And you can see how it came down, just almost touched this 786 here, and then bounced back up again. That's actually very bullish. You can see where price, once it finally got above this 786 after trying twice to get above it, it stayed above it pretty well. Tried to get below it, couldn't, got below it, went back above, couldn't get below it, got below it, went back above, started off from it, went back above, then went higher, came back down today, didn't quite get there, and went back higher. So that 786 has been a very important level, which is 1563. Basically 1563.48 is the price level. So Amazon is really setting up a base for going higher, and I think it's on its way to 1650 or higher. I really do. I think it's going to take out this high, and I think it's going to make new highs, and I think it's going to keep on going. So I'm not in Amazon right now. It's not time to buy it yet, but I'm just kind of sharing my thoughts. And let's see. I want to take a look at Google real quick. I don't trade Facebook, so I'm not real interested in that. Google, after a few days of extremely nice price action, some of the best we've seen in a while, actually. All of this just kind of came crashing down a little bit today. Really came down pretty hard. And obviously it can come down a little bit harder, but given what I'm looking for over the next couple of days, I think the downside is limited. A lot of buying took place over these last few trading sessions, and I don't think buyers are all that ready to get rid of their Google shares just yet. So we'll just kind of see how it all plays out. And then there's Netflix, and let's go ahead. Netflix was a pretty decent performer today. It closed down $2.40, but really not a big move down at all. In fact, it closed higher than it opened, but lower than it closed yesterday. So the same scenario with this one as it was with the Russell. So I think Netflix is going higher. I think all of tech is actually going higher as we progress into the end of the week. The one stock I'm really excited about is Microsoft. I think Microsoft is ready to hit $100 a share. And, I've talked about that before. And I've actually had some positions on, like, back here where I thought it was heading to 100 as well. And then, of course, it just completely collapsed. But, and of course, this is always a joke that's part of the trading community. Oh, this time it's different. Well, we always want to believe that, but it kind of feels like it is this time. So Microsoft's most recent high was actually its all-time high, and it was an intraday high of $98.69, just $1.31 away from $100 a share. And today it closed at $97.32. I think I'm probably going to buy some Microsoft tomorrow. I'm probably going to buy the 100 strike price calls in the July option chain. And I, will obviously do my due diligence and observe the markets in the morning. But this is my number one trade going into the end of the week is Microsoft. Anyway, enough said. That's just where I'm feeling like there's the greatest value. We might get something that moves further, but I think that Microsoft is just a steady Eddie that's just going to plug along and hit 100 and probably keep on going. So that's my my trade of the day, of the week, if you will. All right, and the last thing I want to do, as I alluded to earlier, is draw some Fibonacci's while I've got you here. We've got, oh boy, this is a long video. Well, we're going to make this a little bit, we'll do this relatively quickly. So what I want to do is take the fib levels from where we started the down move in February to where the down, the lowest point of the February lows was. That gives us these levels here. And these levels are still in play. And you can see how price came down, hit the 50% today, and bounced back up off of it and closed above it. Much like yesterday when prices went up to the 618 and bounced back down from it and closed below it. So we've got these two levels, these very important levels, very important Fibonacci levels, the 50% and the 618 from the January high to the February low, that are still being recognized, respected, and being traded against. So we still have other levels that are also very important that need to be looked at as well. And these levels are this secondary high to low, and then we have a next level high to low. And so you can see how we're starting to build these clusters of levels that, let's see, and I'm just going to get rid of levels that are no longer in play here. But right now, you can see where we're consolidating. We're getting this kind of action now. We're hanging out in between these levels. And this, it's a pretty respectable range that we're in here. It's about a 35-point range. So, and actually 2702 up to 27, so a 40-point range. So a 40-point range in the S&P is a little over 1.5%. So that's a pretty decent price range. Now, I think what's going to happen is tomorrow we're probably going to do something like this. We're just going to kind of dink, 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 dink around a little bit. And then on Thursday, I think we start heading higher. And I think we keep going. And I think our markets are going to start looking for 2,800 on the S&P again. And I think we're kind of past the worst of it as it relates to the February lows and the subsequent choppiness and the high volatility. Even though we got a big push up in volatility today, a nice pullback in the broader market, which again is in keeping with an accumulation cycle. You've got to go lower to go higher. Remember that. That is one of the most important things that you can remember when you're trading a market, and you're doing so utilizing technical levels and trying to establish positions on an active basis. Not necessarily a day trader, but definitely a position or swing trader. It's important to understand that concept. So with that, trade safe. Trade what you see if you choose to trade at all. Good night.